Welcome to Market Day Report and welcome to the weekend. Is it too early to say the weekend's here? What is that, 5 o'clock somewhere? Well, okay, never mind. Let's jump into the markets. Overnight trade, and we'll start with the corn market down or up a penny and a quarter on the December at 427 3/4. March contract was 436 1/4, penny and a quarter higher. Roll out to the July contract up 2 at 445. Now soybeans in the overnight session up 2.5 at 996 1/4. March contract gained that 10 handle back at 1001 1/2, up 2.5 and a couple of pennies higher on both July and August. Soy meal contracts overnight were lower while soy oil contracts moved higher. Now to the wheat market. Chicago, July, 573 3/4, penny and a quarter higher. All contracts were in positive territory. Same thing for hard red at 569 3/4. New crop up 2 1/4. And the spring wheat contracts were unchanged on the front months, but half penny higher on the May at 606. Cotton market has been down 14% year to date. It's actually down about 2% week over week. Losses are 4% month over month. Just having a difficult time finding anything positive. March at 70.53, down 57. All right, Brian Hoops is president, Midwest Market Solutions. Brian, first off, good morning and welcome back.
Hey, good morning, Tony, and welcome to everybody. We're getting our trading day kicked off. We do have a little bit higher grain prices, as you noted, overnight, but we don't have a lot of news. We didn't have any private export sales this morning to talk about. The U.S. dollar is a little bit softer this morning, so we're getting a little bit of short covering based off of that in some of the commodities, and that could continue going into the weekend. Yesterday, some of the forecasts were a little bit drier for Argentina. They're back to a little bit wetter, so we really don't have a concern about South American weather at this point in time, but it is something to continue to monitor, continue to watch, especially as we go into the weekend. There's concerns about Russia's winter wheat crop, but of course they're going into dormancy and things can change by the time that crop comes out of dormancy, just like our wheat crop here in the U.S. So all in all, it looks to be mildly traded type day, maybe some short covering because of the lower dollar, but really probably markets that just don't have a lot of direction. Rallies, I think, will be capped, especially in soybeans and soybean meal, because of that expectation for big crops out of South America until the forecast really does change and we'll see, a large short covering if that happens. And if not, we're likely to drift sideways to lower until that crop matures into January timeframe.
So, Brian, earlier I mentioned that cotton has really had a hard time this year to date, but soybeans have topped that, down nearly 23% year to date. Just looking at the 6-month chart on beans right now, and really that shows what's happened since the 1st of June. Really some tough sledding there.
Right. And we've had back-to-back years in the U.S. of big crops, especially soybeans, record crop last year, second largest crop in history this year. Then we've had big crops out of Brazil last year. Argentina was a little bit down. This year, it looks like we're going to have massive crops out of Brazil and Argentina. So you're putting back-to-back type years of large supplies, and that's what the problem is that prices will continually gradually work lower until we relieve that supply situation. Yes, demand is better or improved 16% above last year, but it's not enough. You have to have some sort of a supply changing issue to really see prices move higher or move back to the levels that we were even a year ago or even 6 months ago. So, until that event happens, till the weather changes, rallies are meant to be sold in all these grain markets: soybeans, cotton, wheat, corn, you name it. That's the number one issue, is supply, oversupply in not only the U.S. but in the world marketplace.
Well, let's talk rallies on the livestock side. We'll take a break and then come back and talk cattle and hogs. Market Day Report continues in a moment. We've been saying this all week long. Eyes are on whether or, well, not whether or not, but what will cash cattle be this week? Coming off of a holiday shortened week last week, and we're working our way towards Christmas, which again will be holiday shortened kill week. So this is a pretty important week when it comes to cash cattle. We'll find out in just a moment. Yesterday, how did live cattle finish the session? Well, lower across the board, down $1.40 on the D's at 186.97, 188.55 on the April, down $1.95. Feeders were also in lower territory, losing 202 on the front month at 254.92, 210 lower on the March contract at 253.60. Hog trade, though, has been up 21% year to date. Though the December lower, February unchanged, June contract gaining 22, 101.62. Let's roll back over to cattle now and bring back in Brian Hoops, Midwest Market Solutions. Cash cattle, have we found any buyers?
Well, in the northern trade, we did find some yesterday, 297, and that's about $2 higher than last week's trade and pretty close to what the Packers were bidding early in the week. Southern Plains still not traded. The asking prices out by the feedlots, 192 to 194. Last week's trade was 190. That's where the bids are. I think we might be able to do a little better than steady, but the concern is going forward. We're losing that plant in Kansas that was talked about this week, certainly longer term negative. That doesn't shut down till sometime in 25, so it's a little ways in the future. But the concern is with the cutout values not keeping pace with the cash markets, packer margins falling deeper and deeper into the red. We're about $97 in the red right now, which puts next several weeks' kills in jeopardy as far as any cash strength. So maybe we get a little strength this week. The concern is next week's cash trade. There just hasn't been a lot of real positive news for the cattle market this week. The one maybe positive is steer weights yesterday, down 4 pounds on the week. We're still heavier than a year ago, but it's only by 12 pounds now. So we're narrowing that gap between this year's cattle weights and last year's weights. And finally, options for the December contract expired today, and then Monday is delivery period beginning first notice day for those December live cattle futures. I don't look for any deliveries whatsoever. We're discounting the futures to the cash, so I don't think you have to worry about that at this point in time. Something to watch as we go forward, depending upon what that December futures do today and early part of next week.
Yep, good insight. Thanks, Brian. Have a great weekend. We'll see you back here
Thank you.
Monday morning.